Hi, I'm Garth McKenzie from traderscorner.co.za. This is your weekly look at the S&P 500 and the Nasdaq 100 indices. So as always, we start the week with a look at the daily chart of the S&P 500. It's been quite a month. As you can see, the market sold off quite heavily, and I've marked there the fact that we actually saw a 10% decline from the peak in the beginning of September down to yesterday's low, which was down at about 32.30. So that's a 10% pullback in just 3 weeks. So it's quite a meaningful pullback. 10% is typically the technical definition of a correction in the market. So we've seen 10% downside to yesterday's low, and the market did have quite a good bounce off of the lows yesterday. And you can see a bullish hammer candle registered on yesterday's trade. So that is somewhat encouraging, but it doesn't negate the technical damage that has been done over the last couple of weeks. You can see the technical break to the downside, the break below that rising trend earlier in the month. You can also see that the relative strength index there is now below 50. So that also is something that typically happens when the market is in a slightly weaker trend environment. And notice also that the market is currently trading below the 15-day exponential moving average. And I always like to see that as a general guide of short-term momentum. And if the market is below that 15-day exponential moving average, then one does need to exercise some caution on the long side. If we move on now to the hourly chart of the S&P 500, here you can see the recent trading activity more clearly. So there's been a sideways range between 33.20 and 34.25 over the last couple of weeks. And you can see recently this week, the price has broken down below the bottom of that trading range with a big gap to the downside yesterday. But as I mentioned in the previous chart, there was a nice push up into the end of the session, and that actually saw the market ending near the high for the session. So I think what we've got to watch for now in the near term is the possibility that the S&P 500 maybe moves up, tries to target that gap from yesterday, which is at around about 33.20. If the market is able to recover above that level and push back up into that trading range, that would be a bullish sign, or would be encouraging, let's put it that way. And then we could maybe see the higher gap up at about 33.80 being targeted. I think very important for the near term now is to watch that first gap at 33.20. If the market gets up into that area and then falters and starts to reverse lower, then that probably signals that there might be another leg to the downside still to come here. So just be careful and watch that gap around 33.20 very, very carefully, because that's really going to be quite a key level to monitor. Let's then take a look at the Nasdaq, and here we've got the Nasdaq 100 index daily chart first up, and there you can see the fact that we've had a 13% decline from the high in the beginning of September down to yesterday's low. Yesterday's candle printed a piercing line candle, so that's actually a bullish reversal, and it's also notable that this has happened after quite a significant pullback in the market. One could potentially see a falling wedge pattern forming over there. It's debatable whether that in fact does play out or not. I think for the time being, one's got to still look at the fact that the market is below that 15-day exponential moving average and say, well, that while that is the case, one does still need to be cautious on the long side. But maybe we've seen quite a significant sell-off here, and perhaps the market consolidates some of the recent weakness now. Let's have a look at the final chart of today, and that is the Nasdaq hourly chart. Here you can see that this index had been trading between 11,000 and 11,500 for the last 2 weeks. It broke down below the bottom of that level yesterday, but again did have quite a nice strong close. So we need to see how the market now trades, whether it is able to trade back up into that range and maybe go and target that gap that's highlighted on the chart there, which is at about 11,250. At that gap, we'll need to then make a decision and see whether the market overcomes that gap, or whether the sellers appear at that area and then start the beginning of another leg to the downside. So overall, the market, it's certainly in correction mode at the moment, but it has fallen quite hard into the last couple of weeks. So to expect too much more downside in the very near term might be a little bit too much to expect. Let's see. I think we've got to watch those gaps that I've highlighted on both the S&P 500 and the Nasdaq, because that really is going to hold the key as to whether the market moves higher or fails at those gaps and then starts to turn lower for another leg to the downside. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the Nasdaq indices.